Hello, welcome to the Real Vision Daily Briefing. I'm Maggie Lake. It is September 9th, 2021. With me today is Tony Greer of TG Macro. On our economic radar today, U.S. weekly jobless claims showed fewer Americans applied for unemployment. Pretty good news for the labor market, but that wasn't enough to counter some of those lingering concerns out there, including the continued impact of the Delta variant in China's crackdown on tech. And then, of course, there was the direction of monetary policy. The European Central Bank announced it would slow the pace of the pandemic emergency bond buying it had to put in place, although ECB President Christine Lagarde took great pains to say it was not a tapering of bond buying that is in place to support the Eurozone economy. Jury seems to be a little bit out on that. U.S. stocks struggled for most of the day, ending down about a half a percent. The yield on the 10-year back down at 1.30%. Tony, what did you make of the market action today?
Well, not just four consecutive down days, Maggie. It's
Yeah.
something that we've got to at least be mindful of. The S&P seems to be wanting to trudge higher, but we're doing a little bit of rotating around 4,500 in the S&P, which has been a new milestone. So I think the new dynamic recently for me that I've noticed is that, the emergence of big tech performance once again. FANG is up about 12% in the last 3 months. The FANG complex, I'm talking about Facebook, Apple, Amazon, Netflix, and Google. And it's up 6% in the last 2 weeks. So it was interesting to see that become the new leadership in the markets, where prior to this, we had been in a more cyclical rotation with things like energy stocks and transportation stocks and industrials leading the charge. So there's been a little bit of a change in the rotation. It's a little bit choppy price action. But I think, for the most part, the equity market is, looking over at the macro markets right now. And it seems the same prices in the dollar that it's seen for the last several weeks, the same prices in yields it's seen. Yields are off the lows now. We're still in the middle of that 1.25, 140 range in the 10-year, if I may. I think looking at those market-based inflation expectations stay sideways
Yeah.
is generally a positive for the markets. There's no shocks in either direction. There's no spike in inflationary expectations, and there's no nosedive, kind of a Goldilocks effect, if we can call it that, from the macro markets. And in my opinion, and I'm sticking with this story, is that we've still got a really ferocious commodity rally, broadly speaking, with different leadership changing hands there as well. So I'm really encouraged still about the markets and about the risk complex and taking risk in the markets. And I like that we're seeing different commodities take the lead. Aluminum, nickel today making new highs. Natural gas has been on a tear with shortages and Gulf of Mexico outages. And so, these are the things that keep the complex in a sort of steady baton handoff, where the
Yeah.
leadership keeps changing, but the index keeps going higher all by itself. So
It's
that's kind of how
funny.
I'm looking at the world.
Yeah, it's funny the way you put it because there's like no shortage of news when it comes to commodities. I mean, there's just a ton, and some of it, contradictory or sort of cross currents. But when you look at stocks, you're right. There's no sort of scary headline. But then I think that in itself makes people nervous. People are saying, yeah, it's quiet, it's too quiet, especially in September. And you mentioned the tech stocks. People, it seemed like people have been looking for them to sort of take a back seat, right? They've had such outsized gains looking to try to put some money in work. I've been hearing people talk about that rotation trade, but every time they try to get out of tech stocks, it doesn't work or the timing's not right.
Yeah, it's a good point. I think the only time that tech had stopped performing and was sort of sideways to under pressure was when we really had yields firing at their highs before yields backed off the last time. When we had the 10-year yielding around 2.5, call it 2.5%, 2.5%. That was the last time that I think we had the commodity markets flying away like this. And I lost my train of thought there, Maggie.
Yeah,
What
that's
were we
okay.
just
We were
talking
just talking about no news. It's too quiet. It's
about? Right.
September, right? And so then you feel like you should be rotating out so that you're in position, especially for this inflationary trade, right? But you try to step away from tech, and it takes off again, and we
Thank
just
you.
don't see that follow through on that.
Yeah, you brought me back in line there. It was when
Yeah.
yields were higher was the only time that tech had stopped performing, and we had all of the natural resources stocks that were getting on the run, right? When the oil market was getting going and the copper rally had just gotten started. So now that we've got yields back in this range, we're going to have to see what happens going forward. But as long as the commodities keep changing hands and finding another place to rally, I got a feeling that they're going to catch up. So I think that's what we're seeing now. The problem is that we had yields back to the lows for the last several weeks. Kind of a very, very confusing situation in the treasury market. And so yields back on the lows, talk about the Delta variant, and next thing you know, technology is off and running again. And so I
Yeah.
feel like that might be a little bit the explanation of the dynamic that we're seeing right now.
Yeah, listen, and you start to come into this last quarter, the year, end of the year. Nobody, you want a position, but you have to be holding the winners. I mean, you don't want to say you got out and missed a huge gain again in technology. What about financials? I want to dive into commodities a little bit later, but when we're talking about looking at equities, I feel like there had been interest in having more energy exposure, maybe changing that, and financials. If you're thinking about yields going up, if you're thinking about this tapering happening, maybe you want to be exposed to financials. Are we just too early to do that, or what are you? How are you approaching those sectors?
No, I like the financial sector most recently because it just started performing again. If you look at the XLF chart, it had been consolidating for quite probably the last 3, maybe 6 months. And in the last, I would say, quarter, last month or two, financials have started, cracking into new highs under the leadership quite clearly of Goldman Sachs and Morgan Stanley, which have
Mhm.
taken the lead and just really started trending nicely. We've got Goldman Sachs well above $400 a share here, which is, all time highs, and trying to find a level. So I don't, if we're going to continue to expect that underpinning inflationary environment, we are going to continue to expect that the curve, broadly speaking, is going to stay at some level wider than we've seen it, and potentially expanding. The idea that we should be seeing break evens continue to expand as we get to more economic activity and some more inflation. I think it's okay to be long the banks, especially now that they've come out of a 6 month consolidation period, and XLF is just starting to trudge to new highs again. But like you, I'm always trying to figure out, which is the sector that's going to win the race as we head into the end of the year, and which is really going to pick up and take pace in the last quarter or two, which is what we're looking at.
Yeah, we've got a lot to sift through, and this may speak to some of the caution we're seeing in the market. Um, that we heard from the ECB today, and when I said the jury's out, you could see from the commentary, Christine Lagarde, knowing full well the market are going to be reading everything and saying this lady is not tapering as she would, but other people are like, well, you can say that, but if you're starting to pare back in any way, shape, or form, I mean, they're not changing the overall size, but we're waiting for that Fed news. We're waiting to see what happens. Do we need to get past those hurdles to see some sort of breakout either way in equities? It feels like it's kind of like spiraling, but and there feels like there's a sentiment that, listen, we've gone 7 months now. We haven't had any kind of sizable correction in US equities. We're due for one. We're due for at least some consolidation, but it doesn't seem like it happens. It seems like people want to see it, but it just doesn't get any traction on the downside. It's hard to fight the liquidity, I guess.
Yeah, if you're trading stock from the short side, you have a extremely tight window to get out, a extremely short small margin of error, and a very short time-wise window to cover your short. So yeah, it's been difficult if you're trading it that way. If you're trading from the long side and you have confidence to buy the dip, we've seen that same formula continue to pan out, where we have 2 or 3 negative days in the S&P consecutively, the big tick index prints, when markets are hitting bids, backing off the highs. And then we usually see some type of recovery from the 50-day moving average in a red to green day. And as long as that formula continues to hold true, and we look over at the macro markets, and market-based inflation expectations aren't gyrating, and the bond market isn't dislocating lower to a surprisingly higher yield environment, that to me is kind of Goldilocks scenario for the S&P right now, especially with the commodity strength that's kind of bubbling underneath.
Yeah, we've talked about the fact that everyone waiting for the Fed. The thing that roiled the markets has been the inflation reads. Is that still the sort of risky data point that we need to be watching?
We saw, Maggie, back in May, when we saw the first big headline inflation number hit, right? That was a risk off moment. That was a sell the fact week for the S&P. Stocks backed off. And it was just interesting to see that was the big first headline, like, whoa, CPI above 5%, right? And we've seen a couple of prints like that already. Tomorrow, we're expecting, PPI to be on an 8% handle for the entire year. And bond yields are only creeping a little bit higher toward 135.
Right.
It feels to me like the market can bear this,
Yeah.
like it feels to me like whatever the inflation reading is, I feel like that's the necessary underpinning to the deflationary forces of sort of the Fed expanding their balance sheet and the US expanding our total deficit with more and more stimulus, et cetera, et cetera. So I think that inflation side of the trade is almost necessary component to keep this rally going. And it feels very much like it is. I mean, all the commodities feel like they're in pretty good shape to meet both technically and fundamentally.
Yeah. I want to talk about another position. I don't know though if you got a chance for anyone who's watching from the U.S. Of course, tonight is the beginning of the NFL football season. A lot of enthusiasm around that, especially now sports betting takes off. But dropping in that is Tom Brady, the goat, and Giselle out with a massive commercial for a crypto exchange. FTX reportedly paid them $20 million. I don't know if you had a chance to. It's absolutely hilarious, calling everybody in his contacts, asking them if they're in, including a whole bunch of Boston fans who totally hate him. But it's very very funny. It's kind of funny to see that happen right now. But I don't know if you're in Tom Brady's contacts, Tony. Maybe you are, but if
No.
he's asking if you're in, I guess the answer is yes on Bitcoin.
Well, yeah, I just sort of, I added it as a new long to my view matrix just today, in fact, and not to sound terribly brilliant because I really swapped out of another cryptocurrency position. I was long Coinbase. I saw that they got served a Wells notice, and I decided to say, even though I like Coinbase as an IPO that likely succeeds, I'm going to swap that position into Bitcoin on this dip. We saw the El Salvador story come out on Tuesday. I think it was. They're now going to accept Bitcoin. The platform that they were using sort of went down. Bitcoin collapsed 10%. And to me, it's been doing Bitcoin was that fly in the ointment that I couldn't figure out how it was bouncing so sharply off of 30K, right? I had Bitcoin written off for dead. It bounced off of 30K, started getting itself back together above 50K, and I just did some studies on it and look back and say, if we're looking for true inflationary hedges to the prices in my bills, my grocery bills that have gone up, the best hedge for it has been Bitcoin, which is up 300% over the last year. You look at gold, and gold's down 15% over the last 1 year period. So I've been looking for a spot to buy Bitcoin. It finally opportunistically fell in my lap above the moving averages. And if that were any stock, that's kind of the thing that I like to buy. So I'm wading a little bit into the cryptocurrency market, into Bitcoin at these levels on the dip. And I'm interested to see that Tom Brady commercial. I have to check that out because the last time Giselle made a sort of vocal comment about currencies, if I remember correctly, was back in 2008 when she said she wanted to get paid in euro. And that was the dead ball high of the euro move and started cascading lower from there. So we'll see if this is a poignant moment for cryptocurrency. But it's interesting to see the great one piling into the FTX contract. That's for sure. For 20 million bucks, I'd probably say the same thing.
Listen, this is why we need people who've been around for a little bit so we can remember those moments because honestly, I had completely forgotten about that, but you're right. And let's hope not for anyone who's holding Bitcoin. It struck me, something else came to mind to me. You mentioned Coinbase getting served by the SEC. This is going to air in one of the biggest viewed still live events. It's like waving a red cape at Gary Gensler at the SEC, who clearly is looking to come. So very bold. I don't know if I'm sure this was in the works a long time before this all happened this week, but we'll have to see if the SEC has any response or not. I do want to clarify something you said though, as I think it's important. You weren't in Bitcoin. You weren't in Bitcoin not because you had an ideological stance on the value or the future of crypto. It sounds to me like more that this was just a price action issue for you when it came to Bitcoin.
Yeah, like anything else, Maggie, I'm not dogmatic about Bitcoin. Like I'm not dogmatic about the oil markets, about the commodity markets, or anything. Right? I'm a trader, and I have, you have these conversations going on constantly in your head about the securities that are moving that you may not fully understand. And
Yeah.
and I'm the first one to have my hand up that I still don't fully understand Bitcoin. But it's one of those things where I see another sovereign nation say, okay, we're going to accept this as legal tender. And while I don't really know yet if it's going to be the surviving currency, the surviving cryptocurrency, I'm in a position of being, I've got to live in this world and I've got to trade in this world and I've got to figure out, how to protect, my wealth in different ways and looking for different instruments to do that. When Bitcoin starts to perform and it's kind of elbowing its way into the macro conversation very clearly the way it is, up 300% in the last year
Mhm.
as, a lot of inflationary forces start to take over, that's got my attention as a trader. And so when I have it kind of on my mental radar screen for a while, it's kind of like the thing where, you may not have liked a pair of sneakers for $100, but they hit you with the email and it's now 75%, 25% off. And you say, you know what, for this price, I'm in. And so that's how Bitcoin kind of fell into my lap. I did some of my technical screens. It looks okay. And we're going to put on, I like the risk reward here. I think that
Yeah.
I think the next 15, 20K in price action can be higher in Bitcoin. And so that's kind of the way I'm betting on it right now. Very much just another standalone trade, just like any other trade in my portfolio.
Yeah, and Tony, I think you articulated the point of view that a lot of people have as they're looking at this space, as they're trying to get their head around it. There's so much happening right now. By the way, on Real Vision, for those who are members and who are watching, you probably see there's another deep dive coming out with Raul as he tries to sort of walk through some of the nuances of this quick moving market. So there's a new little mini series, I believe, coming out. And also for our monthly insider talks, Raoul Pal and Julian Bridgeton, the regular series they do, which is open to all Real Vision members to watch. The one and only Harry Melandri just asked Raoul about the situation in El Salvador. Have a listen to what he said.
Boyd asks, could you share your thoughts about the developing, or if you like, regressing relationship between El Salvador and the world's banking community as it relates to the former's move to Bitcoin? Curious what to make of the news in this area.
I think Julian talked about this. It's a direct attack on the system of money, the reserve currency state. Now, what's interesting is, you know, El Salvador's still using the US dollar, so it's not going away. It's not like they're saying they're going to price goods in Bitcoin. It's basically a remittance system and a place to stick some savings that the government can't destroy. So I think everybody's uncomfortable with how fast things are moving. And I think the answer is tough shit. I mean, other Latin American countries will do it as well. I'm not sure what at this early stage, what benefit it'll yet be. But over a 10-year cycle, I think it'll be very, very constructive for these countries.
Tony, I do think it's worth asking as you look at this. Do you have regulatory concerns when you're going into this space? Is your time horizon short enough, and you plan on being nimble enough? That's not something that's really, top of mind for you.
Yeah, I feel like if we have everyone's got half an eye on Gary Gensler now and the SEC and what's going on, sort of publicly between
Mm,
Coinbase and the SEC now. And so, they've got their eye on the lending program. I'm not a specialist in Bitcoin regulation, but it seems like the atmosphere is okay for me. In terms of
yeah,
something, if I have to stop out of Bitcoin down, 8 or 10% and just hit a bid to get out, at least I feel like there'll be enough liquidity there for me to get out. And so that's always my main concern
right.
in terms of how I'm looking at stepping into this investment. When I feel like we've kind of weathered a few regulatory bumps in the last couple of days. The cat's out of the bag that the SEC is definitely looking at that while they're not looking at other things that we're not going to talk about right now. So while my head is on a swivel and I'm prepared to act in any kind of a negative, regulatory environment, I'm not worried about it right now. And as a trader, I can't really handicap when something like that is going to come to the foreground again. So I'm just trading
Right.
this like anything else.
Yeah.
What I'm trying to do is as an old school macro trader is I'm trying to apply my decades of experience trading macro securities to this new currency and to see how it can fit into my trading and how it feels to have on and how it feels to live through a couple of weekends, being long Bitcoin that trades, pretty 24/7. So this is a kind of experimental trade, but it's still one that I can get behind, just like I could get behind buying oil on this dip or buying grains on the dip. It makes sense for me to have it now in my portfolio as the uptake continues and more influential people and countries, employ it.
Mm.
Like I said, I have to live in this world, so let's figure out a way to trade in it.
Yeah, absolutely. I love it. And we're gonna be following along and anxious to hear your thoughts about, how the experience is and some of the perspectives you bring to it as somebody who, has all this experience in some of these other assets, how that applies and what happens. We talked earlier about the fact that there's a lot of news for commodities, for commodity traders for you to get your head around. And it struck me as we were looking at oil today. We had news out that oil production fell by a record amount to a 6 month low, but a record amount because of Hurricane Ida. No surprise for anybody who's seen the pictures coming out of the Gulf. I mean, they're used to the producers and refiners are used to hurricanes, but this thing was a monster, and a lot of the production remains offline. Um, so you would have thought that that would have been supported, but at the same time, China also unprecedented, tapping its strategic reserves for the first time. So there's a lot of cross currents right now. How are you thinking about oil in this environment?
Well, I'm trying to let the spreads kind of dictate how strong the market is holding up. At least it seems like with the calendar year in WTI kind of surfing the 200-day moving average higher. It's above $4 backwardation. I'm talking about the whole 1 year curve in WTI from October 21 to 22. As long as that sort of tightness maintains itself. Um, I feel like I've got a handle on the oil markets. It seems like we got to a price in the 70s. We had that sell the fact OPEC meeting where they allowed the United Arab Emirates to increase their production. We saw a couple of dollars slide out of there from 75 or from mid 70s down to the high 60s. And I think oil can be in a range now, is really how I'm looking at it, Maggie. It feels like, the demand side is there. The structural side is there. The fundamental side is continuing to hold in, and unless we get another real growth scare in another variant or something like that, I'm still trading the energy market like demand is on the rise and supplies are on the decline. So for me, I'm still in a structurally positive market looking to buy dips, and until the market proves me wrong, that's how I'm going to keep playing the energy market.
Yeah, and a lot of people are tracking energy. I mean, not everyone listening maybe trades that, but a lot of people are looking at it because demand side's holding up, or if it's increasing, that's telling you something about global growth potentially. And that's been the missing element for some people who are looking for that recovery. Is it just pushed out, or is it just not there, and is something else going on? Metals have been. You mentioned metals have been on fire lately. How are you positioned there? Are you buying an index, or are you trying to sort of individually look at them, or look at the producers? How are you trying to wrap your head around that? And what should we all be thinking about in that space?
Well, the only thing I could say is that I'm a big technician. Obviously, I was ahead of the copper trade, being long Freeport McMoran for a good portion of the run from $10 to $40, if not the entire run from $10 to $40. What happened there is we ran into another positioning issue where the industrial metals and mining sector, call it XME, got to a peak and started rotating. And then what happened is copper backed way off of the highs, did a test of its 200-day moving average, around 9,200 or so, which it bounced off of. And then what happens is you saw aluminum, with some Russian cutting off some supply. You saw aluminum go and take the lead and make a run to the highs. And then in the last couple of days, you just saw nickel take the lead and run to the highs. And I think that speaks to procuring a lot of industrial metals for the green revolution that we're kind of pivoting into here. And so it's one of those scenarios where while precious metals, gold and silver are kind of sideways trading to quiet trading, you look up every other day and there's
Mm.
another base metal making a new high for the move. So when the complex gets like that, I'm really focusing in on those stocks that are consolidating now in the XME and Freeport McMoran, and trying to sort of get a hold of things like Alcoa that are rallying. But I think it's going to be another trade back into XME, into industrial metals and mining from the long side, that's going to present itself next. Because
Yeah.
for a while, it looked like copper was consolidating and could have curled over. And that formation that looked like a topping formation in copper now just looks like a sideways consolidation. And so if copper can get back on the run and start chasing aluminum and nickel and uranium and natural gas and everything else to new highs, I think that could be a trade that catches fire again in the fourth quarter.
Wow.
Um, Yeah, it's going to be interesting. It was one of the sectors that was right up there in the lead, right behind energy, right behind retail. And it was industrial metals and mining was next. And I think that, while sort of banks and home builders have gained into the race now,
Mm.
I don't want to count out industrial metals and mining between now and the end of the year just because they've been consolidating. I still think that there's potential to run there. So we'll see what happens.
Yeah, I think you bring up a really interesting point. I don't think we hear enough about them being part of the sort of green revolution. I think people tend to think renewables and hydrogen and some of the, but there's a transition that happens in almost every phase, whether where you end up or in the transition. All of those things are critical to getting there. And we're talking about a pivot everywhere, including China, this being top of mind for China. And we know, they can move mountains when they put their mind to, addressing an issue like climate. And they made that change a few years ago. They've been continuing down that road. Are we underestimating the benefit or the knock-on effect from that green revolution in some of these metals?
Well, it could be either that we're underestimating it or the trade is in motion and maybe, got a little bit ahead of itself, with the rally off of the March lockdown lows and base metals has been astronomical, right? They've been outperforming, almost everything except for Bitcoin. And so the moves get to a level, and some of them peter out and some consolidate. But like you said, with the pivot to the green movement and using what we're about to start using record amounts of lithium and other rare earth minerals. To get there, you need all kinds of copper and aluminum and gas and oil. And so we're going to be leaning on a lot of the traditional commodities to get us through the green revolution toward more solar panels and wind turbines that aren't going to provide the same amount of energy that fossil fuels are. So to me, as long as this ESG movement is intact and there's sort of the administration is doing things like asking OPEC to increase production rather than asking the U.S. producers to increase production in
Yeah.
order to cap the price of gasoline. The green movement, that's kind of proof that it's largely for show and that that's the way that we're going here anyway. If
Yeah.
that's the way that we're going here, if we're going to make it more and more difficult to invest in energy infrastructure, if we're going to make it more and more expensive to pull oil out of the ground, and yet we're not going to be able to do a full pivot toward, electric energy for all, I'm going to tell you that the price of oil is likely going higher from here, and that's kind of how I'm going to continue to play that sector.
Yeah, it's so all of these are so critical to that entire conversation, and I think for a lot of us, commodities it's not something that is the first thing that we're investing in. So helpful to have your insight of someone who's been in that space for so long and can kind of take a new trend and then see sort of layer it on the existing market and help us figure out how it's going to be impacted. That
Sure, trying my best, Maggie.
Yeah, we all are, right? Um,
Yeah.
I wanted to ask you about uranium. I don't know if you've been watching that. This is something I do not know anything about, but I was fascinated to see some of the developments going on. I know you've been talking about it a little bit for Real Vision. For those who may have missed it, has what's your sense of that? And is that going to continue or holding the physical metal? I mean, usually that's not what we see in the commodity markets these days.
Well, there's an interesting dynamic in the uranium market right now in that it has creeped into the energy picture, sort of, in my opinion, via the utility sector, right? Where, just several months ago.
Something we know even less about.
Yeah, exactly, exactly. It's a very tricky sector too. So this is why I tiptoe into this sector sort of carefully. But we had that terrible stress on the Texas power grid last summer, and I think that put a lot of utilities into focus in terms of how they're going to continue to produce power. Within that conversation, uranium has always been sitting there like a sitting duck saying, kind of, the uranium nuclear power is here if you want to use it. And we have to make this decision sort of which direction we're going to go politically with uranium because of the dangers of nuclear production, et cetera. But as this sort of, concerns about the power grid, commodity rally, equity rally, some gobs of liquidity world starts to get rolling, people look at uranium and say, hey, this thing hasn't gone anywhere in a long time. And this is another physical commodity that we could be acquiring in some scale. And you turn around and Sprott, who is the resident expert at managing physical commodity ETFs, starts a well, for a while they've had it going now, but they have a uranium physical uranium ETF. So the more money that comes into this ETF, the more physical uranium he buys. And what happens is he then takes the uranium supply away from, different utilities that may need to use it, et cetera, et cetera. And it kind of upsets the dynamic in that market. So there have been a lot of uranium bulls around for a long time that I'm thrilled for them that they're seeing their day. These guys have sent me the thesis in my DMs on Twitter for years now. And I'd always say to them, I can't argue with the trade. I think it should work, but I can't decide what the catalyst is that
Yeah.
spins uranium back into, a household conversation, or at least an energy household conversation. So now that it is, rallying through toward now $40 a pound from the low 30s, and the Sprott Physical Uranium Trust has sort of created this uranium eating monster, as one of my favorite columnists called Doomberg has called it. We've got the uranium market on the run. And so now we're going to get to that point where, is this something that does this dynamic where the positive feedback loop of buying the Sprott Physical Uranium Trust in a market that's operating at a deficit, does that just keep spinning, into positive territory and keep the flywheel going, where Sprott keeps buying uranium and the price keeps going up? So as we continue to operate at a deficit of around 30 or 40 million pounds a year, I think it is, it looks to me like this can continue. It looks to me like the producers have all woken up, like Cameco and NextGen and things like that. And if you look at the uranium ETF, which is URA, a lot of the producers have really started running. So this is a trade that's a very viable energy trade right now, totally tradable, totally liquid, and it's probably going to attract a lot of retail investors. So what's going to happen? It's going to get totally crowded, and then it's
Yeah.
going to shit the bed one day. Right. So, we have to decide where we are in that trade, where we want to be in it going forward, if we want to be in it. And, to me, it's something just like Bitcoin. It's arrived on the high liquidity commodity crazed markets.
Yep.
And I'm going to continue to monitor it. And if it stays a liquid and tradable and trackable commodity the way it is, with a great deficit story, it may be an investment for TG Macro or my clients one day. It may not, but it has definitely creeped its way into the exciting commodity story profile, if you will. So we'll keep a close eye on Sprott Physical Uranium.
Yeah, and everyone should. So if anyone's jumped in, and I love that you said that from the retail side, or for somebody who doesn't maybe have that past history, important to pay attention to what's going on, and how crowded that trade gets, because as you say, that often is portends trouble ahead. So it'll be super
We don't want
interesting
it
to
to turn
watch.
into we don't want it to turn into a meme commodity, right?
No, I know.
Got
I sort of,
stocks
yeah,
out there.
exactly. And I sort of hate that phrase, but we haven't found a better one. You're right. So we have to keep saying it. But it's true. It just means that you have to really sort of lock in and pay attention to some of the sort of longer fundamentals. Fantastic explanation. Thank you for that, because I understood it much better. It looked a little bit different to me, but it makes a whole hell of a lot of sense based on what you
Yeah.
were talking about.
Yeah, it
Um,
fits into the profile of a typical commodity trade. It's just a little stickier because it's nuclear.
I love that somebody is celebrating hard who's messaging you all the time. I'm sure they're going to continue to do that and celebrate the fact that they stuck with it for so long. But I
Yeah.
also think you bring up a really good point. This is what happens when there's gobs of liquidity around, right? Pushing people into risk profile trades doesn't mean there's not fundamentals behind them, but you get a lot of volatility in that. So we all need to be careful. Hopefully make some money, but be careful.
And yeah, and you get curious traders like my friend Cuppy that we just did the interview with, that start turning over rocks and making the story a lot more public. He's got a very, very big public presence, and he is known for being in the right places at the right time. And so those kinds of dynamics feed on themselves really, really quickly in this market. We know that, right? So
Yeah,
we'll
absolutely.
be really careful and just keep that in mind as we follow the trade.
Good stuff. Tony, so much excellent information here today. Going to be really fun to watch what happens with your Bitcoin position. We're going to follow along, and we know we'll see you again soon. So thanks so
Yeah.
much for being with me today. Appreciate it. And thanks for watching, everyone. Real Vision Daily Briefing. We got to wrap it up for today. But tomorrow, Ash Bennington, who's enjoyed a much deserved vacation, I understand, is hosting Row Pal. You're going to want to see that. In the meantime, we'll see y'all on the Exchange Real Vision's social network, where the conversation continues. Thanks. Take it easy, Tony.
Thank you for having me, Maggie.
Take care.